Just means some people are going to have to go to the recording and I'm going to have to redo it. All right. Lee Maxwell, give me a quick second. Hey, Lee, I just sent an email out for the link. So you have to refresh your email and you'll find the link to get on. Sorry. Bye-bye. At least I hope I sent Lee the email. Wouldn't that be funny if I did not? Lee, field sourcing, zero mod. Lee, where are you? Mueller, Kohler, Jackie, Schaffner. What fun. What frustration this is. Well, you shouldn't have to. I'll figure it out for next week. All right, here we go. Let's get this bad boy started. Audience view. All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the second week of January 2021. We are trugging right along is the best way to say it. So last week was our first week in the stock market. We were up 1.8%. The interesting thing is we pretty much matched that, but Baidu kicked our butts today. Pretty interesting. Some of the comments here were the gains came despite the U.S. Capitol being stormed Wednesday by pro-Trump rioters. Interesting, I had friends there, and I'll tell you, what was being reported on CNBC, CNN, and Fox News was not what we were watching live stream via Facebook. So pretty interesting to see the news not quite being legit. With that said, if Trump doesn't resign, it sounds like Pelosi's trying to tomorrow create the impeachment process that'll have to go through by Thursday. So interesting to see what happens here. With that said, unemployment numbers were horrible. Why would unemployment numbers be bad the first week of January? Not that you could say I told you so, but why would unemployment numbers be bad the first week of January? Because people quit working at the beginning of the year. Okay, let's try that one more time. I'm looking for, why do you think people will have, there you go, thank you. Leave it to William. William, this is not United, the UK, but I will definitely agree with you that it's Christmas. People laid off, all that hired help for Christmas is now being laid off that the rush isn't there. It's not that you expect it, but usually the first couple weeks of January, there's an increase in unemployment. So it shouldn't have been a big surprise. But again, if you exaggerate all these people that are out of work and a new president, I just think it's part of the media hype, would be the best way to say it. So let's see here. As I was going through, not too much really stood out here. Nice to see bank shares going, but Stocks to watch. This was offered to me by Bill Bradner. And it looks like it's TD Ameritrade. The stock market has rocketed this year, mostly hitting 52-week bottoms in March. The credit markets overall has set new highs. So it might not be surprising that many of the publicly held companies, the streaming video services, have logged some impressive numbers. Here's a rundown since March lows. So I think these were the top 7. It can't be the top 7. These are 7 that TD Ameritrade was pushing. What do you notice about these 7? These 7 stocks here. What do you notice about them? So yes, the comment there, William. 2 of them you don't know. So let's go through them really quickly. Netflix, Amazon, Disney, Apple. The CMCSA is Comcast. You should be able to find that one by just doing a ticker search. T is AT&T. And the last one, the DISCA, is the Discovery Channel. Or Discovery would be the best way to say it. So I like what Jim just typed in. Some are our target stops, or stocks, not stops. And yes, William, 2 of them we have. Netflix and Amazon, we do not. Fundamentally not sound. Disney and Apple, we do. Comcast, I haven't been in a while. AT&T only up 7%, does not excite me. And Discovery Channel also is one I really wouldn't think about, in all honesty. But there's another interwoven, how'd I say it? These all share something in common again, besides streaming video services. What is it? What is it these guys also all have in common right now? Going once, going, ooh, there we go. People have more time at home, okay? So I guess I'm looking for even a little bit general than that. Stocks and streaming services, that's correct, William, but that already says that. There's an interwoven theme to this that's even broader than streaming video services. Because you would have thought Hulu and Peacock and Discovery's there. History Channel might have been there. What else could, there you go. Technology, correct. Keeve is with us here today. So Keeve is kind of putting a little bit of stuff in there. Technology, they're technology related. It was pretty interesting because they want to remember what the call was last year for technology. I remember. NASDAQ's run too far, too fast. Tesla people, it pushed the NASDAQ too high. 80% of the gains of the NASDAQ is from 6 stocks, which means you have hundreds of other companies to push the NASDAQ higher. And last year, we did a great job of playing some of the NASDAQ stocks that had a pretty neat run in them. With that said, we're starting to look at new stocks: Walmart, Alaska Airlines, PayPal, Square, Carnival Cruise Lines, Royal Cruise Lines, MGM, and Starbucks. Starbucks we already had that we're kind of watching. But Carnival Cruise, well, actually, so let me go back. People asked me last week or a couple weeks ago, actually, I'm sorry, but reiterated last week, when are you going to put me into these new positions? And I don't want to say I thought about it, but my thought process was, I don't know yet. I don't have a good time frame to say, you know what, now's the time to get in. Carnival Cruise Lines did not do very good at its earnings, but it bounced back nicely today. Its earnings weren't great. It shouldn't have good earnings for that matter. But Carnival Cruise Line had some pretty poor earnings, but they seemed to bounce back from it. Whereas down as low as 1963, still finished above 20. Carnival Cruise Lines looks interesting to me. Royal Caribbean Cruise Lines. This one's quite a bit more expensive. It also looks interesting to me. They're going to have no numbers to beat. Income was so low, comps are going to be an easy slam dunk for a beat. But they've got to have the thought process that they're going to come back. What have I been telling you about herd immunity and vaccinations? What have I mentioned about those? Going to take longer. Perfect answer. It probably won't be as quick as we think. Too much time, too hard to get them out. Not enough to make a dent with, 10 million. We need 100 million. How would I say this? And Maud, you're welcome to jump in if I say it wrong, by the way. It's a virus. So vaccine is probably not the right term to use. It should be considered a flu shot to build up your antibodies. It will not keep you necessarily from not getting it, just the same as there's no vaccine for the common cold, the flu, pneumonia. But it helps you with it. And Maud, again, I'm hearing this from my brother that's out in California working on the front lines with the California hospitals. The new strain is much more contagious, but not nearly as deadly. It's like the virus is mutating and learning, if I'm going to live, I can't kill the host. So it means to a certain degree what the initial numbers are coming out as is that it's much more that you can get the virus much quicker, but it's not nearly as lethal or as damaging to the lungs as the first strain was. So it'll be interesting to see if the virus mutates into a nicer virus that is not so deadly. My brother thinks he's got some really neat information on it. Hasn't emailed it to me yet. But time to pay attention to earnings. Time to start getting protection on if you haven't. Keith and I have been getting protection on for quite a while. Yes, Baidu got smashed today. I was so excited it was going to be above 250. I was going to roll protection up. We did not have that opportunity. But start to pay attention to earnings. Banks usually come first. So we'll see banks. JP Morgan will happen this Friday. Bank of America next week. UBS next week. KeyCorp next week. And then we get into the meat of the earnings. The end of the month, Apple on the 27th, Disney on the 11th of February. Baidu's usually end of February. That's not out yet. Ford usually is on the 2nd, not out yet with guaranteed numbers. Boeing end of February. Facebook on the 27th. Freeport McMoran on the 26th. Coke on the 21st usually. Lockheed Martin will be the 26th. Starbucks on the 26th usually. Visa on the 27th usually. Some of these haven't been confirmed. For those that don't remember, AMC after the market closes, BMO before the market opens. It's just a way to know what time these earnings are happening. So again, AMC after the market closes, BMO before the market opens. We've already got a lot of protection on, and hopefully you guys have started to do the same. Where will markets end? It'll be down. I said the same thing last week, and it was an up week. But again, I'm just following the curve, overbought. Indexes usually don't stay overbought for extended periods of time. I really would have thought we would have hit the Dow. The Dow would have hit the top, how would I say this? The overbought line right up here and headed on down. It did not, but we're definitely there on the Williams percent R. So the short answer is, looking at the Dow Jones Industrial Average, technically speaking, the Dow is bullish, but we have certain areas that are showing overbought, way overbought. We're getting a little extended away from our 50-day median line. Normally we'll have a bit of a pullback. This pullback is at risk, especially for an index that's our benchmark, the S&P 500. This index is at risk at news events following up behind it. So pretty interesting. 3 or 4 nice up days, but bouncing off of overbought. When you see that little symbol right there that looks like a plus, that's the Japanese signal or sign for a doji, which means a reversal in direction. Overbought on the Williams percent R. It just looks like things will head back down, especially when you get this space between. So when you see this gap come up, that gap closes. Normal valuations make that gap close. Usually it closes where it touches on it and bounces off. We've gone below a couple times. Welcome to a volatile market. The neat thing is, Keeve and I are more than ready that if the stocks take a tumble, we're going to have protection on. We're ready to go. NASDAQ is also bullish. It looks a lot like the NASDAQ, except for the fact that it even has a bigger space, or it has a bigger differential that usually means a bigger drop on the way down. All righty, let's see what else I got for you today. I'm still calling zero growth for January. Earnings. I didn't write in the earnings, dang it. The earnings, not much today. KB Homes tomorrow. Wednesday, I don't have anything written down that struck my fancy. Thursday, we have BlackRock, we have Delta Airlines, we have Sina Corporation, another Chinese one. Then Friday, Citigroup, Wells Fargo, JP Morgan. Those are the ones that stood out to me. Not to mention options expire Geez, great job, Hurley. Options expire on Friday. Short month, it's the 15th, so we'll have 5 weeks into the next options expiration, I would imagine. 1, 2, 3, 4, 5. Yes, we'll have a 5 weeks into the next week's options expiration. What do we see? Boy, I didn't do any of these things, did I? Nope, I probably should have done this a little bit better. Nothing today. Tomorrow, we have the JOLTS numbers, and we also have the NFIB Small Business Optimism. Optimism Index. Wednesday, we have MBA, the CPI inflation numbers, the CPI core numbers, and we have the Treasury budget. Treasury budget has got to be negative. Thursday, initial and continuing claims always happen. We have import and export numbers. Those usually are not too good. And then Friday is our busy one. We've got the personal PPI inflation numbers. We have business inventory numbers. We have the Empire manufacturing number. We have the retail sales. That'll be usually a pretty good one. And then we have retail X auto. We will have capacity utilization numbers. Industrial production, that's kind of a big one. And we have the Michigan sentiment numbers. So a lot happens on Friday. Internationally, nothing that stood out. When you ask how am I looking to trade, I'm just getting ready for earnings. With that said, I found a very interesting article, and I'm not allowed to publish this one, but basically it says 2021 market predictions are trash. And all they're trying to tell you at this Blueprint Investment Partners firm is that everyone's just guessing. They did a contest where one of the guys that won was like a plumber. I can't remember what he did exactly. The Friends Consulting Partners, 357 predictions. Dollar will weaken, but no real precision. Herding around ideas. Anyway, they had someone that was like a plumber that won and a florist that won on making some predictions. And the reality behind the predictions, what really moves the markets are the cognitive and emotional biases of investors day by day. And even more so, it's the emotional biases and cognitive studies of fund managers of big money. I'm a believer that the retail trader cannot move the market. If all of us put our money in our own private money that's not being run by a professional service, there's not enough retail traders to move the market. But institutional traders, they get scared as things trigger and create a domino effect. Emotional biases and cognitive fundamentals run and move our markets on a constant basis. Investing is about staying with the journey so you can arrive at the desired destination. What a load of crap this is, right? This is obviously an investor telling you, I'm going to do nothing for you, but hold on because I don't get paid if you pull my money out, and the market's going to come back, so don't worry. Strategy matters, predictions do not. Someone please tell me, what the hell is a strategy of a fund? Oh. One word. Someone please tell me, what is the strategy of a fund? It can be filled in one word. And the answer is buy and hold. Correct. Diversification. Correct. You're both correct. I don't know what I'm doing. I'm not going to do any real work. So I'm going to throw in something that's going to throw everything at the window, and something's going to stick. And don't worry, if it's come down, you're going to be okay, right? You're going to be okay. And you sit there and you scratch your head, because in real life, since 2000, it took 19 years for the S&P to double. People that maybe moved some money over, retirement people that retired in 2000, don't worry, you're going to be okay. The market doubles every 7.75 years, which means for every 100,000, your first doubling is going to happen at that 7.75 year mark, and you're going to have 200,000, because that's what real people think, right? And then at the 15.5 year mark, you're going to have 400,000. And then you're going to have another 60% of this. So you think using those averages, you're going to have $640,000. And in real life, it took 19 years to sit in the market and have 100,000 turn into 200,000 if they didn't charge you fees over that 19-year period of time. And some people will tell me, but Kevin, I was at 400. And you look at it and you go, well, in 19 years, you stuck another $100,000 in with your 401k program. So it still only doubled once. It kills me that these people talk about process, strategies, growth, moderate, balanced, 60-40, different classes. Man, the reality is, when everything fell down in 2000, 2008, 96, 93, 90, it just, everything fell. I'm actually putting into my article here their link. It's an interesting article. It's still flawed. You won't hurt my feelings if you don't go to a competitor's website and look at their garbage. So, not a big deal. It is what it is. All right, here we go. Come on. The IP market's getting weird, and we've been here before. Someone just typed a question in. O'clock. You said 10:30 11 hours is going to be Clemson by 1 o'clock. All righty. No worries. IPO market's getting weird. We've been here before. A very interesting article that talks about how the IPOs in the 90s were just going gangbusters, how they hadn't earned enough to make these valuations. Once again, we are doing it all over. And these IPOs that are opening up with these huge surge in price, double the price that they opened up at, it's a mistake. Bottom line is investors got burned. If you're in some of these IPOs that have come out recently, don't hesitate to take your profits and run. Airbnb, Snowflake, the two examples they list, totally don't make any sense valuation-wise. In fact, if I can show you, let's go to Snow really quickly. Down pretty big today, but no forward PE. Earnings per share is there. Quick ratio. I mean, it just, it doesn't make sense. Income, negative $423 million. Sales, $489 million. The short float, 22.6%. What a ridiculous run this stock has had. Priced what? Priced at 90 and opened up at 200. There's nothing fundamentally here that justifies this stock being up, and the short float, ridiculous. This thing will lose hundreds of dollars. It makes me think that, you know what? I would love to put some long puts on Snow just to let it sit, just one, so I can make $100 on one set of long puts. A, B, and B, that's the other one. Airbus, A, B, and B that I use. I like it. Income, negative $1 billion on $3.63 billion. Notice their short float is over 1, which is usually the indicator that you can have a big pullback. Not as bad. They do have some cash per share. But again, there's nothing fundamentally here that makes any sense. If you're burning off $1 billion a year, how do you justify a $140 stock price? Again, this one I thought was down in the 50s when it opened up. Ridiculous. Absolutely ridiculous. And it's an interesting article because it's trying to tell you to watch out. I've got another one here at the end that also gives you a watch out if you don't want to be holding the bag. COVID information, just something to keep in mind. It worries me. We're so ridiculously above what caused our 28% drop in February of last year. It can't get any better. Number one selling pickup truck is which one? You got it. Go Ford Go. Now only sold 787 units. Chevrolet was 594, which is really owned by GM. Ram 563. Toyota 430,000. Honda 330,000. That's not even a truck. That's not even a real SUV. Toyota Camry, 294. Chevrolet Equinox, 270. Honda Civic, 261. GM Sierra, 253. Toyota Tacoma, 238. Ford did an excellent job being the #1 bestseller of pickup trucks, of cars in general. More pickup trucks were sold than cars. I think it was its 39 straight years, the #1 selling, and 44 consecutive year. Pretty neat to see one of our stocks have the opportunity where it should again really take off. Very interesting article from Tech Bitcoin to Long Term Bull, worries about a meltdown in the stock market. What is that? Will strike the market, excuse me. So this is a stock market drop where he's just saying, hey, you've got to take this into consideration. Keith made the comment, the Ford is also the #1 stolen vehicle last year. Of course it is, because he owns a Toyota. No comment is all I'm going to have to say. No comment. Interesting article. Please read a little follow through on Bitcoin. And again, it just talks about the optimism that doesn't seem to be validated by fundamentals. In all honesty, the ridiculous speculation we're going into this year is a joke. All the models that are pricing in growth this year are off. They're in uncharted territory with predictions based on some herd immunity and our economy getting back up. Please mark my words. I will bet we will most likely get shut down this year before we even get, I don't know, 25, 50 million. Mod, what do you think? I'm thinking that we'll end up having our economy shut down again, that the United States will try to follow the United Kingdom's 4 weeks that they're shutting their stuff down, because we're just coming to a point where the hospitals they're at full capacity. California is ridiculous. They're sending people out of California hospitals into other hospitals and emergency clinics, and they've already pulled out their gift areas and their pharmaceutical area, not the pharmaceutical, wherever you get your drugs at. Mod says, yes, I would not be surprised. We're already at max capacity on these hospitals. For the greater good, watch Biden in his first 100 days shut down the whole economy, keep us in for 4 weeks, kind of like in Europe right now. And William, I'm going to kind of use your story, that basically you get beat with the billy club. You had 3 days to prepare, and if you're out on the streets without a special tag for their essential services, the cops are just beating you to death or beating you until you get back into your home. This is in Manchester, part of London, and he says it's a ghost town. You look out the streets and it's just a ghost town. Watch that happen here in the United States. Very interesting article. A little bit about Bitcoin and cryptocurrency, what was wiped off the books. I just put that in there because people were asking me a lot of questions about it last week. And more importantly, I found a really interesting article that talks about what I've said about how Biden administration can bring stability to Utah business sector. It really means everybody, but his potential tax hikes will hurt the economy. So it's a local article. I found it really interesting. Please read through it because I think it's spot on. It'll be interesting to see where we end up. And then I had to throw one more Bitcoin on how it's fool's gold. Anyone buying it's ultimately going to be a fool and holding the bag. only because it came from Peter Schiff. Everyone else, I wouldn't have put it in here, but I suggest that you listen to him. He's smart. He knows what he's talking about. With that said, are there any questions I can answer for you? And Jim, 10:30 your time, that's Eastern Standard Time, correct? But if they increase taxes too much, they'll be voted out in 2 years, so it will be interesting. It will be, but I think some damage will be done. All right, Jim, I'm on it tomorrow, 10:30 your time, which is going to be 8:30 my time. All right, any questions you guys have? I was just trying to get some information out to you today. I'm sorry about the misunderstanding. Hopefully we'll have some things back up and I'll get that GoToWebinar fixed. That's probably on my side. As a heads up, I'm going to be holding off one more week on trade findings and adjustments. We're trying to launch a new website, and as usual, it's just not going as planned. So Keith put me in a headlock, and he basically said, you need to hold off one more week on trade findings and adjustments. So that's what I'm going to do. All right, I'm just busy, and we're trying to figure out if we're really going to get this off and running. Just so you know, anyone that is actively having money managed is going to get the trade findings and adjustments for free. But we are looking to try to help some people that are doing more of their own trading to kind of get some help a couple days a week. That's all that it is. All right, guys, I don't see any new questions coming in. Guys, I appreciate you more than you know. Have a wonderful evening. I will get this posted a little bit later on tonight so you can listen to it again tomorrow and so you can read the articles. Pleasure being with you. I look forward to talking to you next Monday. Have a good night, everyone. Bye-bye.